Welcome everyone and thanks for joining. In this video, I want to share a milestone we've reached with my public investment portfolio on M1 Finance. Now, although I've been investing since 2018, it wasn't until March of this year that I decided to share a public investment journey to my family and friends on a semi-monthly basis. It's been very enjoyable sharing my thought process with them and helping them learn more about personal finance, so I decided to share some of those lessons I've learned along the way here. I plan to share these portfolio updates regularly, so if you enjoy this type of content, please leave a like, subscribe, and let me know down below any burning questions you might have. First off, I should begin by making it explicitly clear what my goals are with this M1 portfolio. After all, what investment strategy you choose should deeply reflect what goals you have, who you are, and your own personal financial situations. There's simply no one-size-fits-all approach when it comes to investing. Some of us might be very young and saving for long-term goals like retirement, allowing us the opportunity to invest in more growth-oriented assets to take advantage of compound interest over many years to let our money grow. On the other hand, some of us might be already approaching retirement, so it makes more financial sense to invest in lower volatility assets to preserve our wealth. Others might be saving for short-term goals like affording a new car, a house, or further education, all of which are goals where it might not warrant investing in risky assets. Some of us might have kids or elderly relatives who rely on our income. Another common situation where lower volatility or higher passive income may be a more important goal towards our emotional well-being. In any case, investing is a highly personal objective, and one should consider very deeply their own personal situation and goals to develop a robust investment strategy. So with all that being said, what are my personal goals? Well, the objective of this portfolio is right here in the title, developing a growth-centric portfolio. My focus is on a diversified portfolio of equity with capital appreciation as the primary motive of this portfolio. Dividend growth is a secondary focus, but a nice added bonus as well. As you'll soon see, I put a high priority on industry-leading companies with above-average growth and robust revenue streams. These tend to be large, relatively stable companies with a strong or even expanding market share. I also love companies that have a long-standing, proven track record of managerial success while also being at the forefront of new innovations. Finally, I plan to hold these investments for many years if all goes right, and I'm much more a believer in passive, long-term investing over short-term trades. This is simply a portfolio I plan to continue investing in until I retire, and it holds 2 broad market exchange-traded funds and 15 of the top companies in the United States. So starting off, let's introduce the technology pie. I plan to go over each of these positions more thoroughly in future videos, so I'll focus on a more cursory view today. It holds 4 positions: Apple, Microsoft, AMD, and TSM. Both Apple and Microsoft are extremely well-known companies, and they make up the 2 largest companies by market cap in the US stock market. As almost everyone knows, Apple's moat is enormous, with revenue streams from iPhone, iPad, MacBook, and iWatch hardware sales to the growing subscription models through Apple TV and Apple Music. Factor in the Apple ecosystem and App Store purchases, and you have an amazing company. And of course, Microsoft is an equally robust company as well, but it has an even greater focus on software development, and digital services is where it really shines. Now, AMD and TSM occupy a smaller part of this pie, but they are still high conviction stocks for me nonetheless. AMD's continual improvements in their semiconductor chips never cease to amaze me, with their research and development constantly making chips both more affordable and more powerful. The Ryzen series is a great example of this. On the other hand, TSM is a manufacturing company of these semiconductor chips, And while they still have a focus on research and development, their objective is more to continually process the millions of chips required around the world every year. And as we progress to a more technologically advanced and digital lifestyle, I anticipate TSM to be on the forefront of chip making. For example, they're smack in the production line of the new and revolutionary Apple M1 chips. They also produce AMD and Qualcomm chips as well. The second genre that I'm bullish on in the long term is streaming. Now this pie only holds 3 positions: Google, Facebook, and Disney. And as much as Google wants to be known as Alphabet, I'm sorry, it will always be Google to me. Anyways, both Google and Facebook are very well known for interactive media. Google, of course, owns Google.com and YouTube, both of which are widely used around the world for searching and streaming. With the growth of these services combined with Google's focus on entering more lifestyle trends like Google Pay, Google Play Store, and Google Photos, I do remain bullish that Google will continually attract more users and businesses into their ecosystem. Facebook is in a similar position where they've long dominated social media through both its namesake platform and Instagram. Combined with their ever-increasing ad revenue just like Google, I feel comfortable holding Facebook even in the wake of potential antitrust lawsuits. And finally, I hold Disney, which has long been a staple of American culture, from the Walt Disney films to Disneyland to their rapidly expanding streaming service of Disney Plus. And although streaming is a highly competitive and increasingly congested industry, I find that these 3 companies are probably going to be the main beneficiaries and capable of maintaining their competitive edge. So moving on to the financials pie, I hold 4 positions: JP Morgan Chase, Visa, MasterCard, and PayPal. JP Morgan Chase is the largest bank by net assets, and it is home to, in my humble opinion, some of the best credit cards and investment assets out there in the market. They have a long-standing track record of continual growth, and I find them to be the best out of the large US banks. Not that there was exactly a high bar to begin with, but nevertheless, I remain bullish on their growth in the financial sphere. I also hold Visa and MasterCard, 2 of the largest payment network companies that dwarf both American Express and Discover in worldwide acceptance. Combined with the growing use of credit cards and the expanding acceptance of cryptocurrency and alternative methods of payment like Apple Pay and Google Pay, I feel confident that both companies will profit as we transition to a more digital and contactless world. Finally, I do hold PayPal as well, which has helped revolutionize peer-to-peer payments and small business networks. And altogether, I remain bullish on all 4 companies as I find them well positioned in our transition to a more digital ecosystem. The 4th largest pie is commerce, and it's actually centered on both retail and e-commerce. There's 3 holdings, all of which I find are leaders in their respective industries. Amazon is by far known for its powerful reach on e-commerce, but they're much less known for their immense technological presence through the Amazon Web Services. Their cloud computing network is impressive, especially combined with the online marketplace and the expansionary growth of Amazon streaming and lifestyle platforms like Amazon Pharmacy, Twitch, and Kindle. Home Depot and Costco make up the large retailers in this pie, but for 2 very different fields of work. Home Depot is the powerhouse when it comes to home improvement retail, and they have far-reaching influence with contractors and construction centers all around the world. And finally, Costco is by far one of the favorite places to shop at for me, where a simple membership fee gives you access to some of the cheapest products on the market, ranging from gas to groceries to clothing to whatever you or your business might need. the company is immensely profitable, and since membership is a big source of their revenue, they put an enormous focus on making sure that their customers and employees are well taken care of. They have some of the highest customer and employee retention rates out there, all signs of a thriving revenue base. All three companies are ones that I believe will continue to lead in their industry and thrive even in a more digital world. Now, the fifth pie of individual stocks is the energy pie, and it makes up 4% of my entire portfolio and houses the electric vehicle powerhouse that is Tesla. Now, Tesla is one of the most popular automobile companies today, but its market expands far beyond just electric vehicles. Its research and development progress has helped it design battery-efficient energy storages, solar panels and solar roofs, and a growing Tesla energy subsidiary that is focused on energy generation in the United States. It's probably the most volatile and riskiest asset of my portfolio, admittedly, but it's still a position that I remain bullish on in the long term, even though it is quite expensive right now. And finally, I hold two broad market ETFs, one that captures the entire domestic US stock market and another for the entire international stock market. And these are VTI and VXUS, respectively. And while I do hold 15 different companies across a variety of sectors, most, if not all of these, are companies that are growth-centric and many are technology-oriented. And while I do believe in their long-term growth prospects, it's also important to hedge our expectations with more diversification into additional sectors and additional global markets. After all, these 15 companies are not the only ones that will benefit from where our technological progress might take us over the next several years. Many other companies in other fields like healthcare or real estate might become strong powerhouses in the future as well. And as a result, it's always important to have exposure to other sectors, no matter how bullish I might feel about a specific stock or industry, because at the end of the day, valuations do matter. So therefore, I really like holding VTI, which is a fund of all 3,000 US stock market companies, so I can benefit from general US innovation and market growth, even if one of my 15 stock picks does poorly or is valued at a very high valuation and is currently a bit more expensive. The additional diversification also gives me significant downside protection. However, it's also financially risky to hold all my assets in one country's financial ecosystem. If I only held US stocks and the US economy were to take a prolonged dip or a prolonged recovery, I would lack exposure to international companies or international markets that might be outperforming the US stock market. Furthermore, developing markets or other international developed markets might be the new hotspots of innovation and technological development, or they might just be undervalued compared to other parts of the world. It's no secret that the United States stock market is currently at a very high valuation, historically speaking. And as a result, it's always important to diversify outside of one's own host country as a means to hedge and create some downside protection. Coupled with the fact that international stocks and US stocks often take turns outperforming each other, a long-term investment strategy will always take into account international equity markets as well for additional diversification. And therefore, I enjoy having VXUS, which is a fund that invests in companies throughout Asia, Europe, Africa, and markets all around the world. And altogether, VTI and VXUS each make up 10% of the M1 growth portfolio. So with all that being said, thank you so much for watching and sticking to the end. Again, if you enjoyed this type of content, please leave a like and consider subscribing. If you would like to jumpstart your investment journey, feel free to use the affiliate links down below for additional free stocks or free cash. Links to my portfolio can also be found below, so you can regularly check for any updates. Thanks for watching, and see you next time.